afternoon once again. Today I'm going to explain what is balance sheet using the equation, the accounting equation. That says assets equals to capital plus liabilities, which means assets, the total assets, that is non-current assets and current assets, they are all equal with all our liabilities and the capital that is that we have, that the business have. So which means if we have the total assets, we are going to want to have the total equity, that is capital plus liabilities, which means balance sheet. In order to have a proper balance sheet, you must say non-current assets, then you add all the non-current assets, then you come up with current assets, then you add all the current assets, then you add current assets plus current assets plus non-current assets, then it is equal to all the liabilities we have, the non-current liabilities and the current liabilities and the capital we have in the business. So I'm going to explain a few things, then I will give you the format, the skeleton format of what? Of the balance sheet. So follow me when I'm what? When I'm telling you. So capital, capital equals to liability. No. We said assets is equal to liabilities. Liabilities plus capital. On assets, we have two categories. That is non-current assets and the current assets. On the non-current assets, we have got buildings, motor vehicles, furniture and fittings, and so forth. Then on current assets, you can use 7 days party before Christmas, which means you first with inventory, that is closing inventory. Use this closing inventory. Then we follow up with the trade receivables. Then we have also 7 days party, which means the prepayments party before means for bank, Christmas for what? For cash. That is on what? On assets, which means on assets, non-current assets plus current assets, which means on this one we have buildings, furniture and fittings. On that one we have 7 days party before Christmas, which means on this one we have on 7 days party before Christmas we have closing inventory, debtors, we have trade receivables. Nowadays we don't do actually say debtors, no, that is not standard, but we say what? Trade receivables. So we have trade receivables, we have prepayments, we have bank, we have cash. But on the side of liabilities, we have also current liabilities plus what? Non-current liabilities. On current liabilities, we have also trade payables, we have also bank overdrafts, we have also other payables. That is what? That is owing plus owing or outstanding or accrual. On the non-current liabilities, we are talking, or we are looking at 1 year, or let us say 2 years and above. 2 years and above loan. We have also anything that is higher paying debts, 2 years and above. That is what? That is going to what? Non-current assets. Then on capital we have our capital, actual capital. We have also our net profit. Net profit, it is added on what? On capital. Then we less what? We less drawings on that one. That is what? That is our balance sheet. So on this one, I'm going to show you below what? On the skeleton table. balance sheet has got this one. We'll put it up on first we have cost, depreciation, MBV, non-current assets. Here, as I said before, we first record our assets. Our assets have two categories. That is what? That is non-current assets plus current assets. So we first record our non-current assets. For example, buildings. Let's say buildings. Yes, let's say buildings. Buildings. Then we record our. On this one, you are going to take it from what? From income statement or statement of comprehensive what? Income. Under expenses. So you're going to take it, then put it on this one, then you subtract cost minus depreciation, then you get what? MBV. On this one, maybe premises, fixtures and fittings, and this one. Then on that one, you can only underline the first two. Then on this one, you remain it for what? For the edition that we want to done. So we put our totals. Then we go to current assets. On current assets, we say we have 7 days party before Christmas. Okay, we have 7 days party before Christmas. We have 7 days party before Christmas. On current assets, that is what? Stock, it is called closing inventory. You have a trade receivables. You have the prepayments. We have the bank. You have cash. On that one, we are going to record on the middle of what? Of our balance sheet. That is on this one. In order to have our amount, then we add. So we have this one. Then we underline that one. The total amount of this one, we're going to record on this one. Then we say this one plus this one. Then we say this one plus this one, we're going to record this one. That is what? Our total assets. So, assets goes to liabilities plus what? Capital. So our assets, we have it. Now we've done our assets. Now we are going to what? To equity and the liabilities. Equity and the liabilities. You are first record what? You can first record even liabilities. You have liabilities, that is trade payables, bank overdraft, other payables. We are going to record on this one. Then the total is going on this one. Then we are going to equity. We face with capital. Add net profit. If we add net profit, we are going to subtract less drawings. That total we are going to put it on this one. Then we are going to add all the liabilities in what? In the total capital. Then that amount is going to what? To be equal in the total assets. That is the skeleton of what? Of a balance sheet. So this is so simple, like eating salad okra. So these are final accounts. What are we saying when we are saying these are final accounts? We first record our transaction on what? On income statement. Then second, we are going to record on what? On a balance sheet. Then we want to know and we want to see that this balance sheet, it might balance or not. This will show how the business is liquidity, how the business is profitable. So this one will pass. So thank you for watching. This is what I've got today. Thank you for like and share. Thank you very much.